What's going on, traders and investors in CCIV stock? This has been a very long time coming, but we finally have good news when it does come down to the CCIV and Lucid Motors merger. We're going to go through everything and what Peter Rawlinson did say about this news event that did come out today, as well as go over the technical analysis because they look very bullish, go over the potential for a short squeeze using the Ortex data. Also, take a look at the Fintel data, which gives you the filings of hedge funds and institutions. And let's take a look at the moves that they are making because this is very interesting and something that should definitely be on your guys' radar. So we're also going to take a look at my position in CCIV as well and touch on a couple other important things you guys need to know about as traders or investors in CCIV stock. But before we get into this very important video, the only thing that I ask is that you hit that like button for me, as well as comment down below, what is your trade in CCIV? Do you like this trade? Do you think there's going to be a short squeeze? How many shares do you own? How long do you plan to hold them? Let me know any information, all that information down below in the comment section if you would like to share that, as well as consider subscribing to the channel. So let's get into this very important video, guys. This is probably one of the most important videos on CCIV I have ever made. We are going to get into exactly what did happen with this vote and the merger, and then we're going to get into the technicals, the short interest, the Fintel data, literally everything else we already talked about. So stockholders approve Lucid's merger with CCIV, will join NASDAQ next week. Now we are going to scroll down here. As we do know, they're getting $4.4 billion to accelerate its production of the Lucid Air and the development of future EVs like the Gravity SUV. And let me know down below as well in the comment section if you guys would like me to make a video just why I'm so bullish about Lucid Motors long term, and I will definitely provide you guys that information, but that is simply way too much to talk about in this video. But it says the closing of this long anticipated merger is expected to close later today, and Lucid Motors is expected to trade on NASDAQ next week under the ticker symbol LCID. So we should expect this coming Monday. I think that's when you're going to see a lot of price action by a lot of hedge funds and institutions that weren't willing to take on the risk of if this vote did not go through. And we have had a lot of things that have really put people down about the actual vote and the merger. And a big one was dilution. You hear this everywhere. Dilution, dilution, dilution. Yes, they have the right now to issue 15 billion additional shares. Do you know what would happen even if they issued a billion shares, 1/15 of the amount they're allowed to issue? You would crater the share price down over 50% because it's straight dilution. You're going to drop the share price. There's going to be more shares outstanding. So they're not going to do that. Peter Rawlinson is mostly paid in stock options. So I don't even think that's a question. They have said themselves they have enough cash to sustain their operations and keep growing their operations until about the second half of 2023. So I don't expect any near-term dilution. I actually expect a short squeeze, but take these videos with a grain of salt. I'm not a financial advisor or a financial planner or your dad for that matter. Unless you guys want me to be down below in the comment section, let me know. Some of you guys are into that weird shit, but all is good with me. So let's get into exactly what is going on with the situation and what Lucid Motors CEO Peter Rawlinson did say. So Lucid Motors put this tweet out. He says, "We're delighted to announce that Churchill Capital shareholders have voted overwhelmingly to approve the business combination with Lucid Motors." A little picture of a Lucid Air, but Lucid CEO and CTO Peter Rawlinson shared his thoughts on the approved merger. "We are thrilled to complete our business combination with CCIV and become a public company. Lucid has further increased its momentum as we gear up to make the first customer deliveries of our Lucid Air lineup of electric sedans later this year. We are making significant investments in the long-term growth and innovation of our company, and we will continue to bring bare world-class technology to positively impact mankind's transition to sustainable mobility. I want to thank Michael and the Churchill team for making this partnership and shared vision." I could not be more excited for Monday to see what does happen because you had a lot of fear going into this. We did not see a rally into this vote or into this merger. We've seen a slight rally, but we are still down quite substantially from even what we've seen last week, being at about $30 per share. So I think you're going to see a lot of buying going into the stock now that that risk is off the table. And if you guys don't know, a SPAC is valued at a certain price. So if the merger doesn't go through with a SPAC company, with the company they're trying to merge into, the shares will be refunded down to that certain price. Now, Lucid Motors, they had more demand than typical SPACs. So typical SPACs are backed at $10, whereas Lucid Motors, they had more demand, like I said, so they're backed at $15. Well, if you're a hedge fund and institution, you want to invest $50 million into this for the long term because you think it's a great investment. If you stand to lose down to $15 a share, down about 40%, 40, even 50, 60% at some points we have seen over the last couple of months, you're going to be highly inclined to not invest in the company until the merger does actually go through, because there still is about a 1 in 3% chance that the merger wouldn't go through. Obviously, before today, now that we do know it is going through, That is the simple reason why I think you're going to see a lot of buying. I think you're going to see this these shorts get squeezed out of their short positions. I think it is pretty much common sense, guys. I'm not saying anything that is too crazy here. Let me know in the comment section as well if you agree with this logic here, because if you know how SPACs work, that is just the simple fact here that they're not going to be doing this. We see this reported in the Fintel data as well, and we will get into that right now. So we're taking a look at the actual institutional investors in CCIV, and a lot of these, they have bought positions, but not big positions by any means. You're seeing 2,500 shares here, 17,275 shares here. This one was pretty big, 107,000 shares, 138,000 shares, but you're not seeing millions of shares. You're not seeing really large blocks of shares actually being purchased by hedge funds and institutions. That is, like I said, because there's a lot of risk, but this is a hyper growth company. There is a lot of growth on the table, and investors, they're not going to want to miss out on this because retail already has their hand in the cookie jar for a long time now. But what I find very interesting about this is that the firms that have been buying CCIV, I know a couple have been selling, but for the most part, they've been holding. And for those of you guys that don't know, I go over the Fintel data quite often. The gray and the white is positions that have stayed the same. They have not really done anything. The red is completely sold out positions, and the green is brand new positions. So for the most part, you're seeing these firms actually holding onto their positions. A lot of these filings were released over the past 7 days or so. This whole page you guys are looking at right now was over the past 7 days or so, the last trading week. For the most part, like I said, they're holding onto their positions. But what I find very interesting is that you're seeing the buying actually coming in at about $25 on average, about $25 to $26. That is still about $2 to $3 higher than we currently sit at $24.30. So I think it's clear here. I think you could make a justifiable argument if the people with all the knowledge, with all the money, they're buying the stock at $25, $26. I think it's a good price to be buying the stock right now, and I expect a lot more people to start buying the stock. As far as people, I do mean regular people and hedge funds and institutions. So that is really what I wanted to point out here. I expect a lot of buying to come in the next time we get reported all the 13F filings. Now let's get into the Ortex data, the short squeeze information you guys need to know about. And keep in mind, take this information with a grain of salt. Ortex is kind of sketchy where they do get their information. Nobody's trying to get sued here. That is only my opinion. They may be 100% accurate. Who knows? It's hard to really tell. But as far as the short interest change of positive 1.23%, return shares 1.02 million, borrowed shares 1.73 million, borrowed change of 712.21 thousand shares. They're indicating we're actually borrowed today. Now, keep in mind, over the past say couple of weeks, we have seen the return shares and the borrowed shares sometimes in the neighborhood of between 15 and even 17 million apiece. So 15 to 17 million borrowed shares and return shares, when the volume of the stock was in between about 4 million and 12 million at the higher end. So we know a lot of this is from the free float that is on loan, not the actual shares that have been shorted. That's very important to keep in mind, because when you short a stock, you first have to get that stock lent to you. So you hold on to the stock and then you sell it short. Well, a lot of these guys, they're holding onto the stock, but they're not selling it short yet. The free float on loan is currently at 28.08%. That is a very large amount. If all of these shares were shorted at once, you probably have the price go down, but especially right now after the positive sentiment CCIV is going to have, I don't think you're going to see a lot of additional shorting going in. I think you're going to start to see the return shares going up a lot, but that does not necessarily mean that shorts are covering. That is very important to keep in mind here, especially when the free float on loan is 28.08%. And the current short interest percentage of free float is 18.12%. That is a 10% difference. So take this information with a grain of salt as well, like I said. But the current shares that are sold short of 37.51 million. So we're seeing a lot of shares that are sold short relative to the volume that we are seeing. And yes, we did see a volume increase today, which is a great sign. Obviously, with the actual price action we have seen, we would expect to see this. But the last time we had a very positive day, we didn't see much increase in the overall volume. We only seen about 2 million additional volume, going from about 10 million to 12 million in volume that day that we did see a decent pop in CCIV stock. I believe it was around 8 or 9%, but today you're seeing 17 million in volume, which is well more than we have seen in over a month, or just about a month now. Back between about July 1st, so about 22 days. Okay, little misinformed there, but point is here, guys, the days to cover is 4.62 days, and the share utilization is at 99.18%. So this is a very hard stock to borrow, and a lot of these shares are already lent out already and waiting to be shorted or just returned. So odds are you'll see the share utilization start to come down, and short sellers will have a better opportunity to actually short the stock if they do want to, but I don't think that is going to be the case. But the days to cover at 4.62 million, that essentially is telling you that if all of the shares that are sold short, or all of the shorts wanted to cover their shares that are sold short, it would take 4.62 days. So once you do see that volume start to increase, obviously you'll see days to cover start to come down, but you're going to see a huge increase in the actual price of CCIV, and that is only my opinion. Now let's get into a little bit of the technicals, guys, and we did hit this low at $20.90 when we did go through a flash crash, and that was July 19th. Well, this was one of a couple flash crashes we have seen recently. The last flash crash was yesterday, I believe, but $20.90, and this, like I said, was July 19th. Then we did see this huge rally throughout the end of the day, the 19th, and then throughout after hours and throughout the rest of trading for July 20th. Then we kind of went down, we're coming back up, but what I want you guys to keep in mind is that we are in a bullish trajectory. Obviously, we're not going down. We had a great day today, and you guys can literally draw this trend line from where we kind of seen this base, where we see the full candles, right? And you're seeing the overall trend going back up. So if we see a good day coming Monday, like I do think, this is going to totally reverse our trajectory, going from this very bearish downtrend right here now into a bullish uptrend. You're going to need to see this stair step like motion, or movement, I should say, in the price action to actually indicate that this is a bullish rally or a bullish indicator overall. But what I want to point out is we are approaching the 200-day moving average, which is at $24.50. So if we break out above this, we've already broke out above the 50-day moving average, which is $24.01. If we do break out of the 200-day at $24.50, that's going to be a very great sign as well that a lot of algos are going to start trading this up. A lot of people, as far as day traders, swing traders, or even institutional investors, will start to bid up the stock. And like we have talked about many times, when it does come to potential upside, what I think a short squeeze could entail for CCIV, if we start to get a lot of retail volume switch their eyes and turn their attention to CCIV, I'm not saying AMC or any of that, but if we do see a lot of retail investors or even hedge funds and institutions that start to buy the stock, because we have had relatively low volume, we have been holding up in between, $24 for the most part and about $27 on the high end, then I do think we're going to see that short squeeze. You're going to see almost 40 million shares that do have to be bought back relative, like I said, to the volume that we have been seeing. I do indicate that we could go to about $35 to $50 per share. That is only my opinion here. Take that with a grain of salt. I wouldn't base any trades based off of what I am saying. That is a recipe for disaster. Really understand what you are doing. But as far as my overall long-term position in CCIV, if you guys have not seen already, my average cost of $23.14, 168 shares at 12.43% of my portfolio. So this is by any means necessary not a small position relative to the portfolio diversity. So this just shows the level of confidence that I do have in CCIV, as well as my total market value of $4,084.08. I'm currently up 5.06%, total return of $196.76. I plan to hold these shares for a good 5, 10, 20 years. I have no plans on selling these anytime soon. But as far as options are concerned, I did sell a put. So when you sell a put, you have to agree to buy 100 shares at this strike price by this date if the stock is under this strike price by this date. So if CCIV is under $20 per share by August 20th, I will have to buy 100 shares of CCIV at $20 per share. So this is actually a very bullish trade, given the amount of time that is on this trade, the low premium you're actually collecting, and the fact that I am just very bullish on CCIV. I think it's a great price to actually buy the stock. But relative to the average credit that I did receive initiating this trade of $167, if I were to have to buy 100 shares, I would really have to buy them at my real cost would be $18.33. And if you're bullish on a stock, then why would you not want to buy it for $18.33? Or specifically, if you're bullish on CCIV stock, like I said, I collected $167 in pretty much profits at that point, just premium up front for making the trade. I am up $66 or 39.52%. As far as my actual short squeeze trade, I do have CCIV $30 calls, 2 of them for August 20th. Now, I did pay $168 for these. I am down 32.74% or $110. Now, key thing here, guys, I only had one at $191. These shot all the way up to over $400 at one point. June 30th, they closed at $393. So point here is, if you guys are making large options trades, because they do expire worthless, and with time decay, with theta decay, your value will go down every single day. The stock does not go up. Then I would, I guess, suggest, because this is not a recommendation, but if you're making big trades like that, feel free to take profits. I like to sell half, get your initial investment back, and hopefully by even selling half, you can collect some profits there and keep the rest of the contracts on the table in case a short squeeze event does happen. But I like to keep these trades small. If they expire worthless, it's not really going to move the needle on my account. If they hit big, then that will definitely hit the needle. That is the overall grand scope of how I trade options for the most part, especially when it does come down to highly convinced short squeeze trades like CCIV is for me. So I'm not asking you guys to believe anything I've said. Critique everything down below in the comment section. But that is going to wrap up this video. Make sure to hit that like button, as well as comment down below everything that I ask you guys to do throughout this whole video, as well as consider subscribing to the channel. Also, if you guys want to get totally free stock, check out the link down below for public, no deposit necessary, no need to link a bank account, and it only takes about 2 minutes time and you'll get your free stock. It's literally free money by definition. As well as, if you guys want to be up to date on all of these trades when they are made, make sure to check out the buy and sell alerts. Like I said, I can suggest a trade to you or tell you why I'm bullish on a trade, and potentially you could buy it if you want to. It's not a recommendation. Like I said, nobody's trying to get sued here, but it's your call to get out of these trades whenever you want. Can get you in these trades, or I can get myself in these trades, but you got to get yourself out of these trades. So if you guys want to be a part of that, check it out, link down below in the description. It is literally cheap. It pays for itself ultimately, but that is going to do it for this video. I will see you guys in the next one.